Hi, this is Andrew Jordan from NodeWise CPA. One thing we do for new clients is we compare the current year return against the previous year line by line. And while we were doing that for an MSP recently, something jumped right out at me. Their prior CPA hadn't elected into PTE. PTE is pass-through entity tax. This is an option that allows S corporations and partnerships to pay tax at the entity level and then receive a federal deduction for those state taxes paid. In the right situation, it's one of those rare things in tax planning where you're not really changing the economics of anything, you're just legally keeping more money. In this particular case, we calculated that if the election had been made last year, it would have saved them about $3,000. But because the business had continued to grow, this year it's going to save them about $6,000. And as they continue growing, it could save them quite a bit more in future years. But honestly, even if all this year does is save them $6,000, that's literally putting $6,000 back into the owner's pocket every single year. That could be a family vacation or an IRA contribution they otherwise might not make, or it could simply be more cash staying in the business. And this company is doing really well already. $6,000 is not some massive life-changing amount for them. But having an extra $6,000 because they're working with a CPA who is proactively looking for opportunities and thinking through these issues carefully, that is absolutely a win. The other thing I think is important to understand is this is not automatic. The pass-through entity tax election is something you have to evaluate based on the state, the business structure, profitability, and the owner's individual tax situation. There are additional forms, elections, calculations, and payments involved, and it does take extra work. A lot of CPAs also work primarily with individuals or smaller businesses where this may not even be relevant very often. But for us, we work primarily with growing businesses, partnerships, and S corporations. So evaluating things like this is just part of our process. A lot of the value in tax work honestly comes from paying attention to details like this consistently over time. If somebody's only goal is getting the return filed as cheaply as possible, honestly, we're probably not the best fit. We spend a lot of time evaluating things like this. So for every eligible client, we look at whether PTET makes sense for them. Sometimes it's a huge benefit, sometimes it's minimal, sometimes it's not the right fit at all. But it's not uncommon for us to find opportunities like this where a little more analysis and a little more work on our side can save clients thousands of dollars. And the important thing is, all that extra work is happening behind the scenes. The client doesn't have to do anything differently. They just end up keeping more of their money.